When a company makes a trading loss, the whole loss can be surrendered for R&D tax credits. No, no, no. There's a cap on how much can be surrendered for cash. If you want to learn more about the cap, stick around and find out on today's episode of the R&D Tax Show. Let's go! Welcome to the R&D Tax Show, where we help accountants, tax advisors and their clients claim R&D tax relief. Today, finally, we're on the fifth and final worst mistake when making an R&D tax claim. So what's the mistake? There's a cap on how much can be surrendered for cash. The mistake is when you do not restrict the losses that are surrendered for R&D tax credits. Let me show you an example. So my client, let's call them SDLTT, and they're structural engineers. The company had a trading loss of £440,844. The R&D costs were £120,222. Now, as you should know by now, this is uplifted by 130% before being included in tax computation. So, the R&D tax costs that should be included in the computation are £156,289. So the new trading loss, including the uplifted R&D tax costs, are £597,133. The mistake would be to claim the £597,133 for payable R&D tax credits. So what should happen? What would an experienced R&D tax consultant do? Well, as I mentioned, there's a cap, and this cap is the lower of the trading loss and 230% of the R&D tax costs. So in SD's situation, it goes something like this. You have a trading loss of £597,133. 230% of the R&D tax costs come to £276,511. So from these two, the lower amount clearly is £276,511. So this is the amount that can be surrendered for payable cash credits. The surrender is at 14.5%. So the amount of cash received is £40,094. The remaining loss of £320,622 can then be used as per the normal rules of losses. So carry forward, carries back, leave, using a year, that sort of thing. So what's a consequence of not following the rules? Well, if this cap's not followed in our example, the company would actually surrender the whole trading loss, which in this case was £597,133, and that would mean that we get cash credits of £86,584. This would mean the company is overclaimed by £46,490. Now let me ask you a question. Would you want to get onto the wrong side of HMRC? Imagine what would happen if they found out. Okay, that's a slight exaggeration, but you get my point. It's quiz time. It'll be an easy one this week. So, Clockworks makes a trading loss, excluding the R&D costs, of £200,000. It has R&D costs of £100,000. How much cash would it receive if it surrenders the loss? You may want to pause for a minute or two whilst working this out. The answer is, well, the trading loss is £200,000. The R&D tax cost of £100,000 is uplifted to £130,000, and therefore the trading loss is £330,000. The R&D tax cost is uplifted to £230,000. So you tell me, what's lower, 230k or 230k? Clearly 230k is lower than 330k. So if the 230k is surrendered for R&D cash credits at 14.5%, this would result in the company getting cash of £33,350. See, it's easy peasy. So as this is your takeaway for the week, if your client makes a trading loss and they want to surrender the loss for payable tax credits, work out the R&D tax as per usual, work out the trading loss, but then also calculate 230% of the R&D tax costs, compare it to a trading loss, and surrender the lower amount. So this was the final part of the worst mistakes to make when you're doing an R&D tax claim. Next week, I'll just do a summary of the 5 episodes. If you've got any questions, join our Facebook group and just drop me a line there. It's so simple. Goodbye.